Ira Epstein with your metals market wrap-up for this Thursday, October 3rd, 2019. Let me explain how the metals are going to work tomorrow in the gold and the silver, in my opinion. It's not a market call. This is different. You've got a big jobs number. If it's a good number, you probably get some pressure in gold and silver. It's a bad number. What you probably get is some safe haven buying. The stock market saw reversals today as the market evened itself up to a degree in front of that. Metals are trying to figure out what to do, as are the foreign currencies. I think everybody's waiting to see what does a good jobs number do. And what's a good number? 145,000 jobs is the average trade. I'll let you figure out the rest. When we take a look at the gold chart, you can see how the market has gone flat here. In reality, you're only $19 away from the highest close that we've had in this rally that's gone on since the first of the year. That's pretty impressive. When we take a look at the chart, it's not all that impressive. We have a wave that went up, made a new low, and we're getting a bounce in the market. And when you look at the swing line, you see you've got the higher high, lower low. It sort of fits in with my idea that this market is trying to figure out, how do you play for tomorrow? When you look at moving averages, come on, you're right against this 18-day average. I call that the line in the sand, the neutral number. That's where this market is. It got there yesterday. It's playing against it now. Admittedly, it closed about $4 or $5 over it, but it didn't do anything important yet. In fact, the negative is if you take out today's low, you could end up with lower highs. You already have a lower low under the 18-day average. What about to the upside? Unless you'd have an outside day up, you'd end up with lower low and a higher high if you took out this number, and you don't play for outside days up or down. Where's the resistance if you rally? Back at 1537, the upper Bollinger Band. Where's the support if you come down through that 18-day average? Back at the lower Bollinger Band. So we have about it's big. It's $50 range where this market's trying to figure out what its next move is going to be. Momentum is up. You can see it coming on. It's come out of an oversold condition. It's up. But while that's up and the bias is up, as I said, you don't have a trend. And if you got through this 1543 to start knocking out or an attempt at an uptrend, you're right into the Bollinger Band. That bothers me. When I'm looking at the GLD ETF, it's no different. The pattern is you got to the lower Bollinger Bands, you found your support there, you went back yesterday to the 18-day average of closes, today a bit of follow through, you took out that low. So what did we do? We ended the downtrend of the lower high, lower low potential. I don't even know if it was there because you had that outside day up. And remember what I used that term, if you've been watching, that ugly chart pattern where you can't figure out what the market's doing? That's where I think this market is. I think it's too hard to figure out. You had the same pattern in GDX, and you've gone back to that 18-day average trying to figure things out. Sometimes you just throw your hands up as a chart to say, I don't have to be in every market all the time anyways. Let it work itself out, and we'll take a fresh look at it. That's pretty much what I think's going on. The gold-silver ratio still favors the gold over the silver. As long as you're staying over this 18-day moving average of closes, that's how I view it. If you were to pull back, the 84 difference would be there, which means silver would be gaining on gold at that time. In the silver, similar to the gold, I don't see a trend. I see a market that made a higher high, a lower low, had 2 days down into the lower Bollinger Bands, bouncing up. Could it challenge the 18-day average? Sure, that's the neutral number. Even if it went through all the way up here at this 1881 level, so what? You're right into this Bollinger top. I'm not convinced yet we've got anything going there. The copper market is bearish, but it's hit its downside target. It got down here, it's done that. Now the question for copper isn't so much the jobs number. We see the U.S. non-manufacturing numbers, manufacturing, everything's weakening, right? The question is the Fed behind the market? We think that is the case. But more important to me at least, how does this deal coming up on October 10th between China and the U.S. on getting something done, as small as it might be, work out? President keeps saying he's going to get his deal or he's not going to do a deal. He's got to do what's right. Well, if he does what's right and doesn't do a deal in his mind, that keeps pressure on this market. This is still a bear market, lower highs, lower lows. It's hit downside targets and it's oversold. Other than if it took out this 256.55 level, you can negate the downtrend, but you'd have to close all the way over 260.80 in order to say, well, the market's got more upside potential and it's actually finished a down leg. That's where I'm at on that chart. In the platinum market, you're oversold, you hit the lower Bollinger Bands, you played around them, you saw that here, you closed over yesterday and there's a little more short covering. Selling an oversold condition in tomorrow's jobs number, I'll let you decide to do that. Then in the palladium, I'll stick with what I know. Whenever you have an embedded reading and you lose it, you lost it here and you came back the next day, if you lose it right away again, which you did today, watch out. It could be surprising to you how the market moves. You were down $35 in that, and that's a bounce off the lows of 12. It was down $47. So momentum, and that's the key word I'm looking at here, is out of the bull side. Yes, the market's still acting friendly, but it probably has to rebuild in my mind. Now, if you get through this 16.15 on a close at the end of the week, you could even set up the lower Bollinger Band. First, you got to do that, and the support's back at that 18-day average of closes. Last in the dollar index, here we were talking. I said 4 days in a row over the upper Bollinger Band. The market favors it's going to pull back within it. Fifth day, it did it. Now, just looking at the chart, you're in an uptrend, you're overbought, but momentum's turning down on you. You start breaking yesterday. Being short doesn't make sense to me when you're in an uptrend, but if the market pulls back, I'm looking for support at 98.25, the 18-day average, and it wouldn't surprise me if the market wants to go into tomorrow's jobs data sort of on the neutral side. You tell me what it did today. I mean, that's right to the dollar. So I think it's a neutral market, bullish bias, but wanting to flip a coin on jobs data you have no control over, I have better things to do. We talk about this in our futures trading kit all the time. Trading strategies, rules for trading, ideas, it's all made up in there. And you can see the different parts that we have. One of my disciplines is why stand in front of a train coming down that track when you don't have to. Some people have to be in the market every moment. I get it. Hedgers do that. But as speculators, you don't have to do that. We have all the chart patterns that you might be interested in right here. Then we work with the Chicago Mercantile Exchange, their brochures. We link to them right on their site, their quizzes to help you learn about trading. Cause and effect sheets will be there about money supply, how it works. Do you go into Fed meetings, different ideas about it. There's plenty to learn. I'm not saying this is the one-stop know-it-all, but it's probably one of the better ones you've ever seen. Pivot points. A day trader's delight, as I like to call it. Then, is the market holding its trends? Are the indicators staying? That's the different relationship between price and time, the Arun indicator in there. And as I said, all the definitions coming from the Merc so that you get a chance to learn. So if this is something that you think might help you, all you need to do is either give us a call, go to our website, right like you see there, and right on the front page, you're going to say Ira's free offers. Click on it. Just fill out what you want. All you do is click away, and it just takes care of itself, and we'll get everything out to you. It comes as a link, this whole thing, by the way. And all you have to do is click up here, and we'll take care of it. In the meantime, I'm Ira Epstein, waiting for a big job numbers day. I'll see you tomorrow.